highs above 80, actually above 82,000. And Mackenzie Sagalos joins us now with a look inside the action. Was there ever a time, Mackenzie, where you said, why am I going to be a crypto expert? That's a big risk. Now look at you. Now look at you. We can't get enough of you. 82,000.
Yeah, I know in 2017 I was talking to Bitcoin miners in Venezuela who were doing it to make ends meet. But now Bitcoin topping $82,000 this morning. As futures premiums jump higher, traders are now betting over $2.9 billion on Bitcoin, soon rising past that 85K threshold on the popular derivatives exchange Deribit. The wider crypto market also seeing outsized gains this morning. Ether has eclipsed Bitcoin's rise of 30% in the last 7 days, and Solana's market cap topped a $100 billion level on Sunday. On the back of U.S. elections, it saw a swell of pro-crypto candidates win office. Now, the total market cap of all those spot Bitcoin ETFs is now above $80 billion, with inflows surging in the last 3 trading days as institutions and their clients pile into the Bitcoin trade post-election. Within fintech stocks, crypto-aligned companies Coinbase and Robinhood, both of whom are in legal fights with the SEC, are moving higher pre-market. And most Bitcoin miners are all seeing double-digit percentage gains as well. Donald Trump, remember, promised that all future Bitcoin will be mined in the U.S. and pledged to rapidly build out the country's energy production and transmission infrastructure, which is a great thing for those power-hungry miners. This is one of multiple commitments made by the president-elect to the crypto industry on the campaign trail, along with vowing to fire SEC Chair Gary Gensler and to launch a national crypto stockpile.
Just looking at MicroStrategy and thinking about, it's 50 billion now, but thinking about Michael Saylor and all along what his viewpoint has been and how he wasn't shy at all about it. And he almost in real life has laser eyes, almost in real life. But the stackers and the hodlers, they must be, at this point, anyone who has been stacking or hodling is on top of the world.
Oh, absolutely. And MicroStrategy was a first mover in terms of adding Bitcoin to their balance sheet. And that's why this national crypto stockpile is so compelling. So essentially, the U.S. government has $16 billion worth of Bitcoin already on its balance sheet that it has amassed through these seizure operations. But what Donald Trump is talking about doing is not only holding on to that, but he's also been talking to Senator Lummis and her team, who put forth legislation to buy 1 million Bitcoin over the course of 5 years so that ultimately you get a supply of Bitcoin held by the U.S. government that is tantamount to what we have in gold reserves, 5% of the total Bitcoin supply. So it's just you're even seeing the U.S. government potentially leaning into this hodl strategy, as you were saying.
Well, either you're just really excited about your job or you're orange pilled, one or the other. I can tell how quickly you talk and how much you know about this. So you eat it up, do you not?
No, I do, and I think that especially that promise to fire SEC Chair Gensler on day one in office is why you're seeing stocks like Coinbase and Robinhood do so well. Because you've got Coinbase that's been fighting the regulator for over a year in court. You've got Robinhood that has a Wells notice in May, so it may not materialize in an actual lawsuit if you see a change of leadership at the top of the SEC. So a lot of these stocks are optimistic about what a Trump presidency might mean.
I saw Anthony, who we had a fun show on Friday with the Mooch, and he's mad at Elizabeth Warren, and he took it out on her again, and it was tweeting about her with her anti-Bitcoin stance being part of not really the election losses, but being at least involved and taking her to task.
But I mean, that's what's been so incredible. I
think there were a lot of things.
There might have been a lot of, but among other things.
North of 280 pro-crypto lawmakers elected to Congress, and you saw, $250 million raised by the crypto industry this cycle. That money was effective.
Happy Bitcoin Monday, freaks. It's your host, Odell, here for another Citadel Dispatch, the interactive live show focused on actual Bitcoin and freedom tech discussion. We are officially back in open water Bitcoin. Pump it right into my veins. I always forget how it feels. It feels amazing. It's good to be here with you all. We have a very important topic today. We will be having heavy price discussion. No, I'm kidding. We will not be having heavy price discussion, but we will be talking about Bitcoin consensus and how Bitcoin works at the protocol level in terms of any potential changes or no potential changes going forward. I have two of my good friends here to join us, but before we get started, that intro was a clip from the largest Bitcoin podcast in the world, CNBC's Squawk Box, that broadcasts every morning. Our boy Joe Kernan reminding the world that the stackers and the hodlers are in charge, and they are all just following our lead. So with all that said, we got Steve Lee here, Bitcoin lead at Spiral Blocks, formerly Square's open source development division. How's it going, Steve?
Really, really good. Thanks for having me. And it's kind of funny, after 2 or 3 years, we still have to preface what block is.
I have to say it just
I
to
know,
troll.
I do too. I do as well.
And we have first time guest on Citadel Dispatch. It's been a long time coming. I can't believe it hasn't happened yet. We have partner at Ego Death, founder of Lyn Alden Investments, and a recently published author with her Broken Money book. And she's about to release a sci-fi book that she's been teasing on Nostr. We have Lyn Alden here. How's it going, Lyn?
Pretty good. Happy to be here finally.
Cheers. It's a pleasure. So we will be talking about Bitcoin consensus. You guys just released a paper on this. You did a lot of work doing a research paper. Steve, where do you want us to start? What are you thinking is important takeaways here? Where do you want this discussion to go?
We can start really high level, what this project is, what motivated us to start it. Also, I think we'll talk about what it is not. So how about I start with that? So, what is this project? We felt it was important we felt like one motivating factor is that we got a sense that there's very little understanding of two fundamental things. First, Bitcoin's really hard to change. And what makes it hard to change? Like, why does it? A lot of us invest in Bitcoin or work on Bitcoin with this underlying thesis that it's not centrally controlled and it basically doesn't change. What actually keeps that intact? So that's one question. And then the flip side of that is, if the broader Bitcoin space, wants to change Bitcoin, improve Bitcoin, what does that look like? How does that happen? And what are some inherent risks with various mechanisms to pursue that? So this project attempts to observe and describe how change is prevented, and then also how it has happened in the past. And then it goes through one exploration for future considerations of how it could happen in a risky way. It's sort of a cautionary tale, that a mechanism that we'd want to avoid. So, and it's also important to point out this is an open source project. A few of us came together to start it, to go from concept to a good starting point. But that's exactly what this is. It's a starting point. It's not the end. And so we've had a couple dozen people in the space with different perspectives on Bitcoin, ranging from miners to ETF issuers to protocol developers to media influencers who have reviewed it. And now it's open source, so anyone can contribute, and we'd very much welcome that.
Awesome. Do you have like a convenient to share URL, or is it just hosted on GitHub?
GitHub is the canonical place to go.
Okay, so
I wouldn't call it convenient, but it's github.com/Bitcoin-cap, CAP.
There we go. Yeah, I guess it's not that bad of a domain. Well, we will link it in the show notes. Lyn, what is your high level thoughts on this paper?
My view is that what's interesting about consensus is that how consensus is achieved changes over time. So it's not like trying to analyze a static thing that's always been a certain way. It's that it changes over time. So when Satoshi was around, consensus changed one way, mainly him updating it. Then as the network grew larger, it updated in different ways. My first article on Bitcoin was in 2017 during the block size war, basically when that was kind of unfolding. So kind of seeing consensus in action was pretty interesting. And so for me, the high level takeaway I think is that consensus is probably has more moving parts than people think, and that we can't 100% rely on the past to dictate what future consensus either opportunities or risks look like, because the field does at least gradually shift over time as there's new types of entrants or as power shifts around a little bit.
Yeah, I mean it's kind of like people think of Bitcoin as like a software project, this open source project, which it is, but it's also like this movement of individuals. There's all these individuals and different stakeholders, and obviously those stakeholders grow over time. Unless Bitcoin's a complete failure, more and more people are adopting it. I mean, obviously, we saw the ETFs launch this year. Also, I mean, this is Michael Saylor's. Well, Michael Saylor just had his first halving. So for like newcomers, they're like, "Oh, Michael Saylor is like the leader of Bitcoin." He's relatively new in the scheme of things. So we've had a lot of new entrants, pension funds, presidents of the United States, all over the place. So I think it's almost more helpful to think of Bitcoin almost as like this living organism, because there's all these different constituents that are like constantly coming into it.
Agreed. And that's also why we don't want to look at this as like a paper that 3 people wrote and published, and then we move on and people can read it. It's instead, it's a project, and it's a living project. We just happen to start it, but we're hoping that 10 years from now or more, it's a timeless project and still can help be a valuable resource within Bitcoin. And maybe I didn't speak to what this project is not, and I think it's important to, because it touches on such a controversial, spicy topic of change and not change, right? So we're actually pretty happy. We announced it on Thursday. I spoke at an event Saturday in Boston, talking about it along with our co-author Ren, and overall the reception's been quite good. We're really happy, but there's also some people reacting, saying that or like concerned that it's going to like it's like a pro change project. And I've actually, and then there we'll go through some of the things we talk about in the project, but there's been people not liking that we're saying alternative Bitcoin implementations are like an important option in Bitcoin, and we've heard the flip side. So what this project is not, number one, is it's not taking a position on changing Bitcoin. It's not taking a position that we should ever change Bitcoin, or what the pace of change in Bitcoin, specifically with respect to consensus rules. Not taking a position there. It's also not attempting to be a blueprint for how to change Bitcoin or what Bitcoin consensus should be. It's just trying to observe how it has worked, currently works, and might work in the future. And it's also not advocating for any particular change. Like there's several consensus proposals that are being discussed within Bitcoin right now. It's not taking a position or championing any of it.
I think that's a good disclaimer. The topic in general about how Bitcoin changes is a quite taboo topic after 2017, and a very hostile, tension-filled dynamic that played out during that period, which is one of the reasons why I was happy to have this conversation on Dispatch, because I like the more spicy things. But yes, there's definitely a subset of the community that probably just immediately see this and think of it as an attack on Bitcoin. I think the overwhelmingly large portion of the research paper is basically just like outlining and trying to define characteristics of Bitcoin and just providing basically a primer, which I think can be very helpful for people that are relatively new to the space. I mean, historically, trying to understand how the protocol evolves over time and changes or doesn't change in particular situations basically took proof of work. It took like time and space. Like you just had to be here and live through it. And it's hard for a newcomer to come here and understand it. And there's a reason, like every good meme is based in reality. There's a reason there's a meme that's, I'm new to Bitcoin and I'm here to fix it. Because it happens very, very often. You see a newcomer come in, particularly someone with deep pockets that buys a lot of Bitcoin, decides that they're going to try and impose their way on Bitcoin. And I think this type of research and definitionally wise, like all the different things that you guys outlined in the paper, kind of preempt that to a degree. It's like you send them this paper, let them read it first. So they're like not coming in on a blank slate. Before we continue, I just want to shout out the freaks who have supported the show in our Nostr enabled live chat, which you can get at rhr.tv/stream. We have Kibo, who zapped us 21,000 sats, saying Bitcoin is hope. We have the great Gazoo, who also zapped us 21,000 sats. I think he's advertising his vinyl live stream on zap.stream called Papoosh Radio 7300. Citadel Dispatch is a pure value for value show. We have no ads or sponsors. I try and do everything the hard way to make my life more difficult. And I try and practice what I preach. So this is the result of that. If it wasn't for you guys continuing to support the show, Dispatch wouldn't happen. So thank you guys. So, I mean, let's go high level first. I mean, what are your, so this idea that, I guess I'm kind of coming from the perspective that I think it's pretty much impossible for there to be any kind of real contentious Bitcoin soft forks in our future. I kind of feel like that period has passed. I mean, Steve, we'll start with you. I'm just curious on like your opinion here. Like, I kind of think it's almost like a moot point. In terms of a lot of these proposals. Like, I think it's kind of just people spinning their wheels in terms of different soft fork proposals right now, because it seems like they're so far away from any kind of broad consensus on changes that they're probably unlikely to happen.
I generally agree. There's several trends that we can observe that have made it harder. I mean, first of all, Bitcoin is just bigger than ever. Any metric you pick, price, number of adopters, number of businesses, number of podcasts, whatever metric you choose, it's 10x bigger than 4 years ago. And just with more of everything, it's harder to coordinate a change. It's harder to get consensus across 10 times more people, 100 times more people. It's also harder to measure consensus. I mean, Lyn alluded to it earlier, which is like, originally it was just Satoshi and Satoshi could make a change and that was consensus. He just pushed the change. Obviously it's much harder now. So for that reason alone, I think I agree. That I still think, I mean, there's changes that there's one change we have to make, which is fixing a bug that happens like when we're going to be dead, but someone's going to have to fix it before, if we want Bitcoin to work after the year 2100. There's other bugs in consensus, and there's a change great consensus cleanup, which fixes a number of those bugs. In theory, we could live with those and just take the risks. There's risks associated with them. My own opinion is let's fix those. But there's still software development work being done to really get that prepared so it's bulletproof and ready. But in terms of like adding new features, it's much harder. But there is more noise than ever in terms of, I shouldn't just say noise. There's more talented software developers than ever exploring ways to improve Bitcoin in, well-intentioned ways. In addition to that, there's more noise than ever to get those changes in. And a lot of those different proposals, they overlap, they do similar things, and it's extremely difficult, even just within the protocol developer community, to get consensus on like, yes, we want to change, and it's this option, not the other 7 that are similar. And I'm referring to the covenants category.
Right.
Having said that, during the show, we should talk about a soft fork scenario that we explored pretty deeply in this project, and we should definitely talk about, which is where you can have relatively small consensus, a relatively small group of people attempt a soft fork and make strong progress towards it. So we probably want to talk about the 6 stakeholder groups first before we jump into that, but let's definitely on that show go through that scenario just so we can have that conversation. You can poke at it and just so the audience hears it.
Well, yeah, let's break down, first of all, the difference between a soft fork and a hard fork, and then let's break down the 6 stakeholder groups.
Sounds good.
And either of you who wants to lead on that?
I can do it. So basically, soft fork is when there's a backward compatible change in general, and the rule set continues to function with the older nodes. That's historically how Bitcoin has changed. A hard fork is when the rules are not backward compatible anymore, so the block construction or the types of transactions are rejected by existing nodes, and therefore you fork the network into 2 truly different sets of coins that share a similar history, but then will diverge from that point. And so, for an example of a hard fork was the Bitcoin and Bitcoin Cash split back in 2017, whereas an example of soft fork is Taproot or SegWit, things that update Bitcoin in a backward compatible way. And for our 6 kind of stakeholder groups, we were trying to define what are the different sources of power in Bitcoin, and how do they wield that power. So we basically, you could make an argument for 3 stakeholder groups or 7 stakeholder groups, and we landed on 6, and there was kind of discussion that went into that, and there's a pretty specific reason for it, which is that we define the stakeholder groups as being sufficiently different if they have a power and an incentive to use that power. And if one or both of those variables is different, then they're effectively a different stakeholder group. Whereas even if they're somewhat different, if they have effectively the same type of power and the same incentive to wield it, then they're, for most intents and purposes, kind of part of the same stakeholder group. So we landed on 6 after a lot of internal discussion for this initial framework. And those are investors, so sizable holders of Bitcoin, or even just many numbers of smaller investors. Another one is economic nodes. So that's nodes for exchanges and payment processors and brokerages. Basically, economic nodes that do a lot of volume, and therefore what version of the software they're running is highly relevant. Then there's miners, of course, in terms of adopting new changes or not adopting new changes, and what they include in a block. Then we have media influencers, basically anyone that is persuasive and has an audience in the Bitcoin space. And of course, an entity or a person could be part of multiple of these categories. You can be an investor and a media person. You could be an investor and a miner. And then the last 2 categories are 2 different types of developers. So we have protocol developers, people that work on Bitcoin Core or in theory alternative clients, and basically the core underlying software that underpins the network. And then we have another group which is application developers that are building things like wallets or alternative layers and building other things that can connect to the network or optimize the network. And the reason we split those up is because they could have somewhat different incentives regarding Bitcoin.
Yeah, that all makes sense to me. I mean, I think a key aspect here is that there's a lot of overlap, right? There's a lot of individuals and organizations that fill multiple stakeholder things, which just makes it even a little bit more messy than it would be otherwise.
Including people on this show, right? All 3 of us invest in different capacities, and the 2 of you have large audiences, media influencers. So there's many people and companies can overlap or touch on multiple stakeholder groups. But as Lyn mentioned, that's not how we're defining it as the separation, like the distinction of power and incentive.
Right. Okay. So Steve, this is your show. What do you think is the most productive next step in this discussion?
Yeah, I mean, there are several sort of, well, what we think novel insights are, and they can get spicy too. So we can just, I don't think there's a particular order, but we can start tackling those. Maybe one is, Lyn mentioned one of the groups is economic nodes, and something, Matt, we chatted about beforehand is like, I think there's a notion among a lot of Bitcoiners that, if you run a Bitcoin node, it's like, it's your rules. You can't change my rules, right? And I mean, on the face of it, of course that's true. Like, if I'm running Bitcoin Core on this laptop I'm on right now, it's the software is running on my computer. I'm in control of that software, so I can download the latest version of Bitcoin Core and run those rules. And those are the rules that basically everyone else is running. But I can modify those rules. I have self-sovereignty there. I can do it. No one can stop me from changing the rules.
Or you can choose not to update, right? Bitcoin.
If Bitcoin Core changes consensus rules, I can choose not to update that software, or just manually roll that back, but keep updating, but remove that change. So yes, it is certainly true on the face of it that each individual in Bitcoin who's running the Bitcoin software, they unilaterally choose which rules they run. But on the flip side, of course, is that you're only in control of your own node. You can't control everyone else's. So if everyone else does change the rules and you don't, then then it depends on which type of fork we're talking about. But if it's a hard fork, then you're going to be off. It's going to be a chain split. You're going to be off on a different network and a different coin. So yes, you have that power to do that. But if literally the rest of the world forks off and you're not on that network and everyone else in the world calls it Bitcoin, then you were powerless in that extreme example.
And I mean, just to add here, the whole point of soft forks is that if you don't update it in a soft fork scenario, you're still part of the consensus of the global network. You can still participate in the system without updating, which is a key aspect of soft forks versus hard forks.
Correct, and that's an advantage of soft forks. It is it's complex though, and so in a few minutes we'll go through a scenario where we'll go through a specific type of soft fork scenario, in which what you just said still holds true, but it still doesn't mean there's not risk, and that fragility cannot be the case with a soft fork as well. But the flip of that is also true. If I'm running a node on my computer and I change the rules, that doesn't mean anything for the rest of the network or other people. I have to convince them to update the rules if that is what I think Bitcoin is. So the BCAP analysis, the category of economic nodes, as Lyn mentioned, it implies, I mean, the more volume done by a node, meaning Bitcoin sent and received, the more powerful it is within that category. So if I'm just running Bitcoin Core on my laptop, but literally don't even have a wallet I don't even receive coins, that's basically inconsequential. It really doesn't matter. So whereas if you're a super large exchange and you're doing millions or tens of millions of dollars or more of volume per day, it is a much bigger factor when it comes to defining Bitcoin.
But I mean, I think we're gonna have to this is going to be a very fluid conversation. I'm excited for it. But like in 2017, what happened was there was two elements of 2017, right? So we had Bitcoin Cash, which was a pure hard fork, right? With replay protection. So at that point with Bitcoin Cash, when it forked in, I think early August, if you were holding Bitcoin at that point, you had an equivalent amount of Bitcoin and Bitcoin Cash. There's two distinct, so the chains had shared history in the past, but going forward, they had diverged history, and you could keep both if you just wanted to sit there, or if you were in a coma or something, or you could sell one or the other. And then later that year, we had SegWit2x, which died on arrival because there was a bug in the, it was an off by one error in the code. But SegWit2x was led by pretty much every major company at that point in time. Almost every major company at that point in time supported SegWit2x, and they controlled the overwhelming majority of economic nodes. And SegWit2x proceeded to fail, and the status quo remained.
That's true. So
Yeah.
my statement about within the economic node category, how much volume you do matters. That shouldn't be interpreted as like they're the ones in charge. It's not like Coinbase is in charge or Cash App's in charge just because they do a lot of volume. It's just within that category, Coinbase or Cash App have more power than me running Bitcoin on my laptop within that role.
Yeah, I would also add that SegWit2x was a hard fork, and we identified in the paper, and we're not the first to identify this, is that when you have a soft fork versus a hard fork, different levers of power matter differently. So in a hard fork, investors are very impactful right away because you can sell the coin that is out of favor, that is generally going to be the one that's the hard fork, but in theory you could sell the incumbent, but you can sell whichever coin you don't agree with, and that is very impactful very quickly. And even with futures market, you could affect that even before the split happens, and therefore affect which one is likely to win after the split. In a soft fork, at least for quite a while, investors are notably less powerful because they don't really have that lever to pull unless they decide they want to get out of the network entirely. They're not really just deciding whether or not the new soft fork is likely to be adopted or not. And so I think Steve's point about economic nodes being relevant, especially in that category, that would be a somewhat different scenario than SegWit2x. So I think what we learned from the whole Newark agreement and that whole era is that, trying to push a hard fork change that users and the broader network doesn't like is obviously very hard to do. But in theory, they might have had more power, for example, if they got together and decided they liked the soft fork. It could have been a different scenario or a different chance of likelihood of success.
Yeah, and if we look at 2017, well, first of all, I don't think any of us know exactly what all the factors were that led to the failure of SegWit2x, but certainly one of the components was in the fall of 2017, Bitfinex ran a futures market with the two coins, Bitcoin and SegWit2x. And if my recollection is correct, it was something like a 10 to 1 price difference between the two. And so that's and we did look it up. The volume, the volume there was not as large as maybe I had thought. So it's not clear how much influence it had, or like how representative it was if the volume was relatively low. But it was a real thing, and people paid attention to it. And that was certainly a signal for like what the market was thinking, what Bitcoin is and should be, which is the original rules, not SegWit2x. There's also earlier in 2017 a UASF movement and a lot of UASF discussion on Twitter. And if I recall correctly, Litecoin did a UASF. And I definitely hear from a segment of Bitcoiners saying that like that was the reason, like the user movement, UASF saved the day from 100% hash, 95% of hash rate, 95% of exchanges, etc. I think the media influencer part of that was powerful. It like the people yelling and screaming were very powerful in 2017. But again, like if you're just a small holder, you don't run a Bitcoin business, and you're just running a node at home that actually isn't like sending and receiving Bitcoin every day, then running Bitcoin and changing or you know and running like a UASF. Sorry for the dogs. Isn't really going to be, that alone is not going to be that impactful.
Finally, not my dogs on air. We passed 86,000. Woo! Let's go. Open water Bitcoin, baby. People forget every price was once an all-time high. Every single number was once an all-time high. Yeah, I mean, I think it's important at the high level to realize that, first of all, no change. It's like in warfare, right? Like the defenders always have the advantage, and in Bitcoin, no change is that home field advantage. I think in general, when you're looking at any kind of change to Bitcoin, the most likely outcome is no change. I mean, if I recall back to 2017, there was like very little organic support for Segwit 2x. Like it was just, there was almost no one that was formally advocating for it except for this like form letter that was sent out by the big companies. And in the lead up to it, the only people really talking about it having a potential of happening were saying that it was a chaotic outcome and it provided uncertainty to Bitcoin. And then you had a loud minority, well, maybe even a majority, but the loud people were saying that it just wasn't going to happen and it was bad for Bitcoin. And if you look back on the price action of what happened was it failed, and then we did our 20x run in Bitcoin price shortly thereafter. I mean, I remember, and this is one of the tragedies of me deleting my X account. I remember like Ryan Selkis specifically saying that everyone should just pile into Ethereum because there was so much uncertainty in Bitcoin land. That was a relatively popular sentiment at the time, with Segwit 2x looming on the horizon. So it was like there was almost no proponents for it in a vocal way as that thing played out.
Yep. Agreed. Maybe we can walk through a potential future scenario, which just adds to this conversation, but gets into a little bit more of the nuance. And that's, I mean, you just said, Matt, like it's, the defenders have an advantage. I agree with that, but I'm going to walk through a scenario where we could get caught off guard. So which is why I think it's important to discuss this so that we're not caught off guard.
And I would add real quick, I can imagine, and this leads into the point you're going to make, I can imagine a scenario where contentious soft fork does have some grassroots support, but is contentious, right? So, and I think we're seeing that to some extent now. It's hard to measure exactly how big. And then one of the powers that media influencers have is to try to overstate the size of a proposed thing, or try to understate that. And that can be very powerful because it can be self-prophesizing in a way. People want to be on the if something seems like it's gaining momentum, people generally are more inclined to go that route if they were kind of undecided to begin with. So I'll leave it to Steve, but basically I can imagine this scenario. It's well, I wouldn't call it a base case. I do think it's mindful to be aware of, and that's part of why we did this project. Is we figured that knowledge is power, and knowledge can help avoid some of what could be, some pretty tricky or technically damaging scenarios in some contentious situations.
So the scenario I'm going to set up, what or did you have something, Matt?
No, go.
Okay. One of the trends or observations that is important is that mining is more centralized than ever, which is sad. And it's not healthy. And a bunch of people are working on making mining more decentralized. But the reality is right now, you can get 3 people in a room, the CEOs of the 3 largest mining pools, and they control something on the order of 95% of hash rate. And I find that a bit alarming. It's not as bad as it sounds just with what I said, because miners can switch from one pool to another, and those switching costs are relatively low. So it's not like red alert bad, but it's a yellow alert bad. That's something we want to improve over time.
I mean, before you continue, I would I would say that mining centralization on the pool level is not as bad as it was historically. I mean, if you go back to 2017, Bitmain probably indirectly controlled, and specifically Jihan probably indirectly controlled like 75% of the hash. And now he probably indirectly, well, not him because he left Bitmain, but like the Bitmain mafia probably controls about 50% of the hash. And we have Foundry, which is like the suit KYC regulated mining pool that controls about 35% of the hash. So if you combine them together, you get to like 90, but they're two very different stakeholders, right? Like I mean, I'm not saying that it's not something that we want to see improve. And yes, I am acknowledging the irony that I'm putting a lot of faith in a KYC suit mining pool. But I will say that they seem like they have their heads on straight in a lot of ways, and I don't really interact with the Chinese side of the ball game. But in general, miners I think would rather not have any kind of uncertainty or chaos or stuff. So I think in general, if we saw any kind of contentious type of attack type of change, a lot of miners would act in self-interest and try and seek out a way to mitigate that, whether that's switching pools, as Steve said. Um, yeah, primarily switching pools, right? And now we do have like Ocean doesn't really have that much hash rate, but we have the ability for people to self mine. They have the ability to move to Ocean and use Datum and choose their own block construction, or move to Foundry, for instance, right? If they're doing one of the, and just even more there's a lot of nuance here. When I say that the ant pool Bitmain Mafia has 50%, it's because of the way block construction works. Basically, like the central bank of ant pool is handling a lot of the background for a lot of smaller pools. So there's a bunch of smaller pools that in effect can be thought of as one pool, and they all add up to 50%. Okay, Steve, now you can continue.
Yeah, I agree with everything you said. And my statement about increased centralization, over the past 4 years or so, 4 or 5 years, and that's because of the last thing you said, which is Bitmain / Ant Pool is like a front for many of the other branded pools today.
Yeah.
So yes, it's true. Miners can switch away from pools, but a scenario that concerns me is one in which if there's some kind of business incentive for both Foundry and Bitmain, which I agree, it's healthy to have two very different types of companies in two very different jurisdictions run by probably very different cultures. That is healthy for Bitcoin. But let's say there's some commonality and some business motivation or ideological or whatever that convinces both. It's possible all they have to do is change the software they're running silently. They don't need to go through a signaling process or communicate it publicly. They can do it silently, and change the software to support some new consensus rule change. And so in that scenario, there's no fleeing of miners if they're unaware. Now,
right.
Also in this scenario, let's say it's silent maybe that when the miners start doing it, these 2 or 3 mining pools, but then a handful of economic nodes and services adopt it because they're clamoring. They're like some services that are being built today depend on a consensus rule change. Like their VCs are funding them to do a startup and a service that depends on a consensus change. It's huge risk because, as stated earlier, the odds are Bitcoin's not going to change, which means the service won't work. But if the consensus change is supported by hash rate, then those services could provide features that allow their customers to lock up Bitcoin with those new rules. And the rest of the network, the rest of the economic nodes can be blind to this, or they don't need to upgrade their software. They don't need to even be aware of it. And this could happen. And it's a very dangerous situation if the customers of these new services start locking up their Bitcoin. because while it works fine as long as the miners keep producing blocks that support those new rules, what can happen is if people are really locking up Bitcoin in these scripts with the new rules, that builds up a bounty.
Right.
And the reason it becomes a bounty is that if the miners, if Hashrace decides to effectively 51% attack and roll back those rules, what the rest of the network sees is an anyone can spend. That's how soft forks work. So if the rest of the network never updated their software to support these new rules, and the miners roll back those rules, the rest of the network doesn't lose any sleep. It literally doesn't change the rest of the network at all. But what happens to the customers who locked up their Bitcoin with these new rules? They just lost all their money. What technically happens is there is a chain split. There's a fork, and those who locked up their Bitcoin with the new rules and the services and the economic nodes that support the new rules would be on one chain, and the rest of the network would be on the other chain. And of course, that's like a total shit show scenario.
Wait. So let's just walk through. So hypothetically, the Antpool Mafia, their 50% hash rate, and Foundry, they both update to the soft fork. People are locking up funds or whatever. Then there's still like 10% of the hash that's not with them. And we'll just for simplicity's sake, let's say someone mines a block on Ocean and they construct their own block and they're not running, this quote unquote secret soft fork, and they spend that money. They take that money from the users that have their funds locked up. At that point, then that soft fork becomes a hard fork. Then there's a retroactive chain split effectively, right?
Correct.
And
Yes.
so, isn't there a game theory that as long as there's, but I guess at that point, so much of the hash is on the other side, is on the secret soft fork side, that it would have a significant amount more of cumulative proof of work, while the other side would have like 3% or 5% of the hash. But at that point, it would become very obvious that a secret soft fork happened, and we'd be in hard fork territory.
Yeah, I think there's at least a couple of scenarios to explore here. The one I think you're talking about is where you don't get 100% of hash rate supporting these new rules, but like 95% or something, and then like Ocean or whatever still is supporting legacy. There can be a hard fork from that. The scenario I'm talking about is like, let's just assume a relatively cleaner, simpler scenario where we go from 0% of hash rate supporting a new rule to 100%. And then some transaction, some customers locking up funds with these new rules, but the vast majority of the network, not hash rate, but economic nodes, don't upgrade their Bitcoin software to enforce the new rules, which can happen out of ignorance. It doesn't mean they're against them, or it clearly means that they're not for them because they're not even, they didn't upgrade, but it doesn't mean they're against them. They could be unaware.
Right.
And then in that scenario, if let's say like $1 billion, like let's say someone builds like some gambling casino meme coin trading service or something on, with these new rules, you can imagine that attracting tons of customers who want to get rich. And like, let's say $1 billion is locked up in Bitcoin transactions with these new rules. That's a large bounty. Because all that has to happen then is a single person in the world, it could be us, anyone, could broadcast a transaction that spends all of that $1 billion and pays yourself. And then you give like half of it to the miners in fees.
Right.
Like a huge incentive. Now, that transaction goes nowhere if the miners continue to support the new rules, because it would be invalid with the new rules. So it would just get rejected as invalid. However, the miners are going to see this like $500 million or $1 billion incentive, and at some threshold, they're going to be like, we want that money. And if there's a 51% attack, if there's collusion among a very small set of mining pools that want to capture that bounty and claim it, they can do that and if their calculation is correct, that like the vast majority of the Bitcoin network didn't upgrade the Bitcoin rules, then it's only forking off this small faction that really pushed for these new rules. Another ingredient for this scenario is, another observation that's important to understand. Historically, every consensus change in Bitcoin that has occurred has been merged into the Bitcoin Core project, and it's come through Bitcoin Core. And Bitcoin Core is one implementation of Bitcoin. It doesn't define Bitcoin. It's just one implementation, but it happens to be used by like 99% of the network. It's the dominant implementation of the network. So if a consensus change is merged there, it doesn't mean Bitcoin adopts it. But if there's not huge controversy over a consensus change, such as Taproot is a good example, or basically any change prior to SegWit, there wasn't like a lot of controversy in Bitcoin. And so the rest of the network just upgrades to the latest version of Bitcoin Core, and then they have those rules. For this scenario, though, what we're observing is that there might be protocol developers and other stakeholders who want a consensus change in Bitcoin, but the Bitcoin Core project isn't prioritizing evaluating it or reviewing any changes, and it might not get merged into Bitcoin Core. So part of the BCAP project, part of this scenario that I'm describing, is one in which an alternative client, like an alternative implementation, is created to support the consensus rules. And that can simply just be a fork of Bitcoin Core, and you add in the consensus change, and then getting adoption of that. So a huge part of this analysis, and the reason why in this scenario, I think the likely outcome is that most of the network doesn't adopt these consensus rules, is because they'd have to switch away from Bitcoin Core to an alternative implementation. And that's a big decision. Like, imagine you're running a multi-million-dollar business. If you don't have a great business need for this new consensus change, why would you adopt new software when the Bitcoin Core project has been something you've relied on for many, many years, and it's worked well? Like, it's earned its reputation of being secure, trustworthy, conservative around consensus changes. It has that reputation for a good reason, and that's why most people run that software. It's a huge, huge challenge to get the network to adopt an alternative client.
Yes. I think it's kind of a cop-out, especially after all the work you guys did on the research paper, to say these two words. But and I guess the beauty of Bitcoin is you're not supposed to assume necessarily rational actors. You're just supposed to assume selfish, greedy actors. But rational actors, there's a game theory here where they wouldn't want to attempt some kind of secret soft fork because it would be incredibly messy, and their golden goose is Bitcoin, right? In 2017, Jihan with a Bitmain heavily supported Bcash, but he never moved the majority of his hash rate over to Bcash. Like, he could have at any point moved, nearly 70% of the hash over to Bcash, and that just never happened. And there's something that's not objective and hard to quantify, but the reason presumably was because he was afraid that he's a nobody without Bitcoin, right? Like, he's got nothing. And he was afraid of disrupting that golden goose.
Yeah, I hope that's true. I hope the scenario described is so far-fetched and unrealistic that it never comes to pass. But I think it's good to discuss it. And just so if it is as easy as everyone's of course we won't go down this path. Well, let's have people thinking about that and having it top of mind so we don't actually go down that
Right.
path. Definitely hear from software developers. There's definitely frustration by people who have been earnestly working on like how to improve Bitcoin technically with proposals, and then frustration that it doesn't get the attention from any active Bitcoin core developers, or not that many, and it doesn't get review cycles from the Bitcoin core project. And I guess another insight from working on BCAP is the kind of power that Bitcoin core developers have, particularly the maintainers. It's like actually the opposite of what I hear a lot of people new to Bitcoin think. Like a lot of people new to Bitcoin, or even the people who have been around Bitcoin for a long time but don't really understand the Bitcoin core project or developers very well, will assert that the maintainers, like 5 people, are in control of Bitcoin. Like they can change Bitcoin and we're powerless. And of course that's ridiculous and false. Sure, they can like click a button and merge in a consensus change to Bitcoin Core, but number one, it's public and transparent, and everyone's going to see that and be like, "What the fuck are you doing?" If there's not consensus. And number two, people don't have to update that software. If there is something that absurd, like there would be a fork of the Bitcoin Core project, and like people would just all the earnest or honest developers would move to that. So of course they don't have that power, but the flip of that, we observe that they do have, which is a veto-ish type power. And I say it-ish because it's not a full veto, but because Bitcoin Core is so dominant on the network, it's so difficult to get to coordinate the entire network to switch to a new project, a new implementation of Bitcoin. If the Bitcoin Core project doesn't merge in a consensus change, it makes it very, very, very difficult for the network to adopt that change. You would need to go through a scenario like I described 5 minutes ago.
Right.
So I do think that power is quite, or that is a big power by the Bitcoin Core maintainers.
So, I mean, plenty of people are bullying me in the chat about audio quality and video quality, and I think the recording will be much better quality. I am obviously not home. I'm not in my studio. But I can hear Lyn and Steve great, so I think the recording is going to come out great. Is there an argument, like sometimes I feel like people came out of 2017, like they took away the wrong things. Is there an argument that there should be more hard forks because it's cleaner than soft forks? Like Bcash, obviously the market completely rejected it. No one wanted it. It didn't really have any kind of talented developers behind it. It was very much I think it was just something clearly users didn't want, right? And it was making the wrong trade-off balance. But is there an argument to be made that's particularly for contentious things? Like anyone can hard fork. One of the coolest parts about Bitcoin is like literally anyone can hard fork if they want to. Does it not have like way less edge cases and potentials for chaos if you just have them just hard fork and just see what happens?
I mean, I think it depends. Well, you sort of framed it as like for contentious changes. I mean, for non-contentious changes, let me first state my impression when I started really diving deep into Bitcoin and learning in 2017. My initial impression was soft forks are just decidedly better than hard forks for any change that a soft fork can be used. And I don't think it's that simple. I think it's definitely, there's a set of trade-offs between the two. So it's not that simple. But having said that, I still think for any non-contentious change, a soft fork, its advantages outweigh hard forks. And because if it's non-contentious, we don't want anyone to fork off. We want to keep the network intact. And the network is just so large and vast now, it seems incredibly difficult to get the entire network. And you'd need a really, really, really long period of time like 5 years or more to like for a flag day in which everyone has to have upgraded their rules within that very, very long period of time. If you do it in like, I mean, we show data in the paper on how long it takes just naturally for people to upgrade Bitcoin Core. And I think it's like on average 40, about a year or whatever. All right. I figured if that's maybe that's the 50th percentile or something. I mean, it takes years for people to the whole network to upgrade. So that's my thoughts on soft fork versus hard fork.
Yeah,
Go on, Lyn.
I think that, and I also think that, so because hard forks are very hard to pull off compared to the incumbent network, most of the people that are in favor of a contentious change, let's say the more progressive side, people that are more technically progressive, they want a certain change, they have an incentive to try to make all of Bitcoin change, or to have a change that is compatible with the existing network. That's kind of what they ultimately want to do. So from their perspective, I would see why they're trying to, they'd instead push more toward a contentious soft fork than push toward a contentious hard fork and just kind of go play with their own coin.
Very, very good. I totally agree.
But I mean, doesn't it go to reason that there's so many different types of stakeholders in Bitcoin that almost everything will be contentious at this point?
Well, I mean, I mentioned the great consensus cleanup earlier. Like, I'm optimistic that we'll see that change and it won't be controversial, but it's in the category of bug fixes, right? So as long as the software is created super well tested, vetted, and then the purpose of it is clearly communicated, it's really hard to imagine any stakeholder not wanting to see it, because even if you're in the investor stakeholder group and your definition or the purpose of Bitcoin in your mind is store of value, that's all you care about, you should absolutely care about security that could ruin your store of value. So I do think that change is likely to get consensus, but new features, much harder. But again, if the way the dynamics are right now, if the Bitcoin Core project can be convinced there's a change, including a new feature that is beneficial to the network and doesn't introduce sufficient risk, if it gets merged into Bitcoin Core, that's a very powerful step, because the inertia of the network is to run Bitcoin Core and then upgrade to the latest version of Bitcoin Core. So it requires a response then by the network to not have that change occur. And I think Taproot is a good example of that. Most people in Bitcoin can't really explain Taproot. When it activated, I mean, I know if you're on Twitter or listen to your podcast, you probably have heard of it. But there's a lot of Bitcoiners who aren't on Twitter. And they, so even in 2021, when it activated, I bet a huge portion of people in Bitcoin or hold Bitcoin weren't even aware of Taproot. And guess what? They got it, and so I think that could occur again.
Yeah, but Taproot might as well have been a decade ago. Like that was, it was a different time. And I think there was also a level of complacency where, I don't know, we had just been out of 2017. We were like riding high. Taproot had been like pretty well reviewed, and like people were just like, the stakeholder dynamic right now is completely different. I know it's an incredibly controversial opinion, and but I just, to me, like I feel like it's a wrong takeaway from 2017 with hard forks. Like for whatever reason, like I know why the main reason we don't do hard fork first is a security reason, right? And it makes sense to me, right? This idea that if we do a hard fork, all the previous clients aren't backwards compatible. And the problem with that is if there's a bug introduced or something like that, the network just grinds to a halt instead of people being able to fall back to older nodes, or if you're running an older node, it still works, right? And that's a key aspect. This idea of soft forks being backwards compatible and the idea of like being opt-in is actually kind of bullshit in my mind, because if you have a pre-SegWit node, for instance, you're not seeing any SegWit transaction or any Taproot transaction. Like, you're basically not interacting with the network. You're not verifying the majority of economic activity that's happening on the network. And ultimately you have no choice but to be a part of it. So like like when you're talking about consent rather than technical things, when you're talking about social consent, soft fork actually feels a little bit more insidious to me. It feels a little bit more like the no change defender doesn't have as much agency in that situation. While with a hard fork, like 2017, yeah, it was chaotic to a degree. It was a little bit messy, but ultimately, like, if you just slept through the whole thing, you still had just as much Bitcoin as before, and you just had just as much Bitcoin Cash as before, and you could just like wait it out and see what happened on each side, and you'd be completely fine. Like, yeah, some of us did quite well selling the Bitcoin Cash side, but you could just sit there. And I yes, just real quick, Lynn, just for like something that's particularly contentious, why it's just weird to me that we don't see more hard forks. Like, why don't we just see, like, I mean, I'll just call it out by degree, because like it seems like the thing that most, like, a lot of people, a vocal minority, have wanted, which is opcat. Is like, why don't you just see like an opcat hard fork? You just do it as a hard fork and then play it out and see what happens, rather than trying to do this whole song and dance.
I mean, I think Lyn's answer before is correct and answered that. Like if let's say that happened, I think most observers, and certainly including me, that hard fork would be destined to be the next BCH or BSV. It would not get much hash rate. Investors wouldn't price it very high. It would just be this altcoin, almost certainly. And I think the people who are advocates for CAT, they don't want that. They genuinely and earnestly believe that CAT makes Bitcoin better. They're Bitcoiners. They want to see Bitcoin have that. They want to see the Bitcoin that all of us use have that. So as Lyn said earlier, they're not incentivized to do a hard fork. It's like the opposite of their goals.
And I would point out my prior comment that hard forks and soft forks have different stakeholders have different levels of power in those scenarios. So to your point, Matt, hard forks and soft forks affect those groups differently. So in a hard fork scenario, it gives the investors a lot more power, the vast majority of the power. Whereas in a contentious soft fork scenario, or any sort of soft fork scenario, that gives economic nodes and some of the other stakeholder groups generally more power than those investors, at least until there's a sufficiently long time that if they decide they don't like that network anymore, they could sell, and therefore they could impair the network. But they don't really have much of a say while that change is going, and so the network can kind of move on without them. So I agree that obviously contentious soft forks have risks. I mean, that's part of why we wrote this paper, to explore some of those risks. But yeah, I don't disagree with you.
I mean, but do we agree that they're like, first of all, the 2100 bug that you mentioned, that, and no one's figured out a way to do that with the software, so that's going to require a hard fork. Presumably something that we do way in advance, that has a flag day, that is like multiple clients compatible with, right? Like multiple releases of Bitcoin Core compatible with. So by the time we hit the hard fork, you could be running a 5-year backdated version of Bitcoin Core and it's still compatible with the hard fork. But it's going to require a hard fork. But this idea that the hard fork can never become the dominant chain, I think that might be misguided. Like,
I agree.
just because, like, Bitcoin Cash was fucking retarded, just to be frank. Like, it never had a chance. That doesn't mean that we couldn't have something that made sense and had actual market demand that became the predominant chain and became quote unquote Bitcoin. Like, who decides which chain is Bitcoin?
I agree with you.
It would just be I agree too. It would be really controversial, right? Because you gotta set a date, and like if you pick 1 year, I think a huge portion of people would say that's way too soon. And
Right.
to get more people on board, not only on board with the change, but on board with the activation mechanism, you'd need to pick it to be like 5 years or more. Then the people who want that change don't want to wait 5 or 10 years for a flag data drop. So I think that's an interesting dynamic to discuss. So in fact, that whole scenario I think would be interesting to add to the BCAP project, going deeper on that.
I agree. Yeah, I think my takeaway from that thing is that it's not that hard forks can never win. It's that you need quite a lot of consensus to have the hard forks, and the ones that were proposed or activated, ranging from Bcash to SegWit 2x, just didn't hit anywhere near the threshold that would be required. Whereas something like a critical bug with the existing chain, that's the highest obvious case for making the hard fork win. And there could be other scenarios that are just so powerful. Maybe before that, like 2100 thing happens, we have quantum computers, and that finally becomes like a thing, and maybe there's changes around that or something like that. Like that basically something that threatens the existing chain in such a way that the hard fork is clearly superior in that type of environment is probably the scenarios I would envision for a successful hard fork.
Before we wrap, I want to know, or I wanted to state another insight we had from the project, which I took away as a really positive takeaway that I had not thought of before, and I'm not sure how many others have as well. But I know that there's like a segment of Bitcoiners who are concerned about with the emergence of ETFs and big institutional money and powerful entities like that. What could that mean for the future of Bitcoin? Are they going to take control of Bitcoin and add like KYC to the protocol, et cetera? There's like a fear of that. Definitely something we should be talking about and doing everything in our power to avoid. But from our analysis on this project, I think there's a case to be made for the self-custody individual investor having disproportionate power within the investor class. And if you wind up in any kind of hard fork scenario where you fork A and fork B that are being priced, or a futures market where we're speculating on fork A or fork B, which one's Bitcoin, which one do we that value more? Well, how does that market work? It requires someone that, I mean, in the case of a hard fork, your Bitcoin turns into 2 coins. I have the same, X number of coins for both forks. If I really feel strongly that fork A is Bitcoin and fork B is not, and that fork A is going to hold future value, then if I can put my mouth is, I can sell all of fork B and I can double my stack size on fork A. It's super attractive value proposition if you have the guts to do it and you believe in it. Of course, if you're wrong and you literally sell all of one and double on the other, you could wind up with 0 Bitcoin if you're not correct. But in that scenario, who are the investors that are in a position to do that and do that quickly? It's self-custody investors. They not only own the Bitcoin, but they control the keys. Whereas if you think about like BlackRock, Fidelity, and big ETF issuers, they're likely to be very conservative because they don't own Bitcoin they're controlling. In fact, they don't own it and they don't control it. Coinbase controls the Bitcoin. BlackRock is just the issuer, and then the owners are the shareholders. So it's a much more complicated situation. And obviously BlackRock's and Coinbase are highly regulated companies. So they're going to be very risk averse. There's tons of people involved in the decision. They're highly unlikely to sell one fork, dump it, and double down on the other when it's still contentious and being decided. Even like corporate treasuries are going to be more slow moving and slow to act than a self-custody investor. So, given the early movement on such a market can really suggest which fork is Bitcoin, I think self-custody investors have a lot of power.
I mean, this is one of the reasons why like hard forks for contentious stuff kind of appeal to me more. Not that like I pretend to be like the judge, jury, and executioner on this shit. I would say Steve mentioned earlier, like some VCs are investing in things that require consensus changes. I will just full stop say that 1031 has a rubric where we will never invest in anything that requires a consensus change. And that's not even necessarily ideologically driven, which it also aligns with ideology. It is just straight. If you invest in things that require consensus changes, you're probably burning your investors' capital because it probably won't happen. Like if you pick any individual consensus change, it is very unlikely to happen on an individual basis. And I think I see Lyn nodding. From what I know, at least from the non-stealth companies that EcoDeath has invested in, I don't think they've invested in anything that requires a consensus change. Am I correct?
That's correct, and I would say that the stealth one is also in that category. It doesn't
Yeah.
involve. It's nothing particularly controversial.
Yeah.
Yeah, I do think there's a lot of naivete from like expecting Bitcoin to change for some of these new VC funded services. I mean, I myself lost a bet that I made in 2017 or 2018. I bet 10 million sats that any prev out and taproot would be activated by the end of, I think, 2020 or something like that. And any prev out has never been activated, and taproot activated like 9 months after the bet. So well, that's now like $8,000-9,000. So I feel I learned my lesson there of something I was like really excited about and bullish on, and I thought made a lot of sense for Bitcoin. And I every day in Bitcoin, I just learn how slow things move, and I very much embrace that now. But yeah, if you're new to Bitcoin and you're a VC and you're like, oh, all these shiny new things that can be done, they sound exciting. I can see how that can be seductive, but it at minimum has to be acknowledged as an enormous risk. I mean, investing in startups is already a huge risk. And then you have like a 10x multiplier. If not only the service that's getting created finds product market fit and customers and business model, but you also need Bitcoin to change. It's like a 10x risk multiplier.
Awesome. Any other insights you want to cover from the paper?
One of the last ones is that we define state of mind, which is that different groups can have different levels of conviction. So we again broke that down into 6 categories. So on one end of the spectrum, there's people that are for a change, but then are also willing to expend resources to try to make that change happen. Then there are people that are on the other side that are against it and willing to expend resources to stop that change from happening. Then you have the two that are in a little bit where they either support it or against it, but they're just kind of hands off. And there's two in the middle that are neutral for different reasons. One is that they're aware of the change and they don't have an opinion. They just decide I'm not technical. I'm just going to let the network figure it out. Or they just don't even know it's happening. They couldn't tell you it's happening. And so one of our goals with the paper is to get more people out of the unaware camp, at least, to kind of increase the overall level of education, including for ourselves, on how the network works and what some of the risks are in consensus. Because I guess we figure, or at least I figure, that a more informed network is a healthier network.
Yep.
Awesome. Yeah, I agree. Knowledge is power.
Yeah, I agree. Knowledge is power. And just one last thing. Again, it's an open source project. It's the beginning, not the end. So we very much welcome people to engage. We're not claiming this is a perfect analysis or that we have all the answers here in this analysis. So there's undoubtedly things that can be improved and new additions. And as Lyn said earlier, Bitcoin keeps changing as well. Even if this were a perfect analysis, it wouldn't be a perfect analysis in a few years. So we welcome contributors to file issues if they see problems. If people want to actually, open PRs and improve it, we would love to see that. And then people who are, really highly engaged in helping with the project, we'd love to have more maintainers of the project as well. And people from different stakeholder groups. A good diversity in people who are engaging in the project would be great.
Wonderful. Thank you guys for joining. I enjoyed this conversation. I hope to have both of you on again sometime in the future. I mean, Steve's pretty much a constant routine guest, but Lyn, it would be a pleasure to have you back.
I appreciate that. It's been great to be here. I think it was a good discussion.
Wonderful. So thank you guys for joining. Thanks to the freaks who joined us in the live chat. Huge shout out to the freaks who continue to support the show, whether through Podcasting 2.0 apps or through Zaps on zap.stream. The top boost on Podcasting 2.0 apps from last week was 8 Mithrandura Ride or Die Freak with 2,100 sats saying good rip. Thank you. I love having Adam back on. And stay on the stack sats. Appreciate you guys. Peace.
Thank you.
Our world is chaotic, but life found its way by channeling energy to bring order to chaos. It is in our nature to seek signals amongst noise because it is through communication and exchange that we evolve beyond the darkness of chaos into the dawn of civilization. Our evolution thrives in exchange of all the info we try to convey. They flow through to the marketplace and form the signals to regulate how we coordinate where things need to be. Price speaks, so we learn to compete. This drives us to efficiently shape the world with our voice. Now let the market speak. And so we build, we sow, we trade, we grow to meet our wants and needs. We specialize to drive from the mind our creations into reality. We made progress in our process to get more for less, advancing society. We brought forth dawn of the age of technology that harnessed the energy to reach prosperity. Our money embodies the power to reap what we sow, so the market becomes a channel for our collective energy to flow. When value is traded for value, we are aligned and so we evolve. This is how, amidst uncertainty, life continues to grow. But the dawn of tech gave rise to light-speed information exchange. So to transact fast, we further abstract money from energy constraints and became more aligned on a few large entities to coordinate trade, concentrating the power, resources, and authority to create more and more of our money, distorting its signals, eroding its worth, and throwing us back into the darkness of chaos. When we destroy the mechanism of money, we destroy our ability to navigate through uncertainty. And when we can't trade value freely and directly, we must trust the few to govern the many. What happens when all our means center around an authority? Complexity builds, now coordination relies on conformity. Observe our thoughts to censor dissent and coerce our actions. Can there be true innovation when there's no freedom of expression? What happens to our voice, the ones that shape social discourse? Now whose ideas gets created and which problems get solved? If our progress depends on hearing many sides to resolve, then why would we suppress the voice that shapes how humanity evolves? When we cut off the perspectives that make up society, we lose sight of the truth that forms our entire reality. Each person's contribution builds up our resiliency. Did we forget these differences are what strengthens humanity? When communication breaks, our words turn to silence. Our acts become violent and the world is divided amongst darkness. Truth is twisted by our pain and our bias, eroding the common ground, making us more and more fragile. To navigate uncertainty, we must solve for robustness. So everything gets tried and tested by various efforts until we discover the system that best coordinates us, mirrors life's process of channeling energy to create signal from chaos. In the era of technology, we transform energy into computational power to process the noise of free markets into structured order. And just by looking at numbers, we can derive how much power is required to reduce chaos and inscribe a flow of value for all to verify that our transactions happened in line with shared rules. We don't need to seek trust when we can see proof It is real-time consensus that aligns us to evolve. This is how, amidst uncertainty, our lives continue to grow when we uphold our own rules, we preserve our own worth, and defend our own voice, which lets the true market emerge. The strength of the design lies in each of our participation, since we are the nodes that channel our energy end to end. As we claim responsibility to uphold our own rights, we radiate the power that brings our truth into light. And when that dawn of light touches all parts of the globe, and it ripples throughout society, and it returns us the hope that becomes the power that sparks humanity to thrive, that same power that fuels the creation of the mind. And when our mind and our money are truly set free and they transcend the limits of past boundaries, now knowing becomes owning and ideas become wealth. What happens now? We can all push to expand the edges of our existence. It is through evolution when things are the hardest. As we head for the light, we have to push through the darkness. It is in these moments we do what we do best. We take the chaos and the darkness and use our power to create. It is in these